Let's have a clear conversation about how LLC taxes really work. Don't you go anywhere. You're going to love today's conversation. I guarantee it.
One in a million, one in a million, one in a million. You know they're coming up to me, cause I'm just the kind of flower with a stinging kind of beat, but the rhythm's getting higher. Go, 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 go. One in a million, one in a million, one in a million, one in a million, one in a million.
Welcome back, folks, to another edition of the Awesome Shorty Show. How are you today? I hope you are doing fantastic. I'm doing marvelous if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I really want to explain to you how LLC taxes work for federal and state. So let me give you first an overview. So how LLC members are taxed. So LLC owners report business income and losses on their personal tax returns. Okay, so a limited liability company, LLC, is not a separate tax entity like a corporation. Instead, it is what the IRS calls a pass-through entity, like a partnership or sole proprietorship. So all of the profits and losses of the LLC pass through the business to the LLC owners, called members, okay? And those members will report their information on their personal tax returns. So the LLC itself does not pay federal income taxes, although some states impose an annual tax on LLCs. California, for example, okay? So how is an LLC taxed? So it's important to understand that the LLC will pass through their income to the member's personal income tax return, right? So this allows LLC to avoid what we call the double taxation of a corporation, for example, while still having the benefits of limited liability protection. I really want to dig a little deeper here. So each business structure has a different set of rules for tax time. And this extends also to different types of LLCs. For example, a single member LLC is taxed as a sole proprietorship by default, while a multi-member LLC follows partnership tax rules. So an LLC owner may also choose to be taxed as an S corporation, which definitely activates an entirely different set of rules. Okay, this is very important. So one thing you need to understand here is that if you're a single member LLC and your tax treatment is a sole proprietorship, the tax rate applied is your personal tax rate. If you're a multi-member LLC and you want a partnership tax treatment, the tax rate applied is the individual tax rate for each member. If you're an LLC taxed as an S corp, the tax treatment is an S corp, and the tax rate applied is the personal tax rate. Very important. Okay, so each of these structures has unique costs and benefits. So it's really important to understand why you are choosing an LLC and how you are setting it up. For example, an LLC with S corp taxation can often save owners on taxes, but only if they are making a full-time income from the business. So when you own a partnership or use S corp taxation, your business income is passed through to your personal tax return using Form 1065 or Schedule K1. With a sole proprietorship or a standard single member LLC, your business taxes go on your personal tax return using Schedule C. Okay, so this is very important to understand. Let's talk about how income is taxed from an LLC. So the IRS treats your LLC like a sole proprietorship or a partnership. I've already established that, depending on the number of members in your LLC. So let's talk about single member LLCs. So the IRS will treat one member LLCs as sole proprietorships for tax purposes, only for tax purposes. This means what? That the LLC itself does not pay taxes and does not have to file a return with the IRS. As the sole owner of your LLC, you must report all profits or losses of the LLC on your 1040 tax return every single year. And depending on your business, you might attach one or more of the following schedules to your 1040. So you might have to attach Schedule C to report business income. You might have to attach Schedule E to report income from rental properties and investments. And you might have to attach Schedule SE to pay self-employment tax. Very important. So even if you leave profits in the company's bank account at the end of the year, for instance, to cover future expenses or expand the business, you must pay income tax on that money. Because the IRS is not waiting for you to actually bring the money. No. They want to get their share of your income really quick. So single member LLCs are taxed by the IRS as disregarded entities. Once you understand that part, you really understand everything. Okay, with all of your LLC income, you can pay yourself with a distribution, but you'll have to pay self-employment taxes on your distribution. But because you already paid income tax on the LLC's total profit, you do not have to pay income tax on the distribution. This is very important. So we have multi-member LLCs. So this is for single-member LLCs. For multi-member LLCs, well, the IRS will treat them as partnerships for tax purposes, unless you elect S corporation tax treatment. Okay, so like one-member LLCs, co-owned LLCs do not pay taxes on business income. Instead, the LLC owners each pay taxes on their share of the profits on their personal income tax returns, with Schedule E attached, of course. So this is very important to understand that part. Okay, so the thing is that you can consider electing corporate taxation for your LLC. That's totally possible. Okay, if you want to keep a substantial amount of profits in your LLC, and this is called retained earnings, you might benefit from electing corporate taxation. So any LLC can choose to be treated like a corporation for tax purposes by filing IRS Form 8832. Okay, and this is something we have covered on other shows. So if you are interested, go to our video library and you can see 8832 there. One question that is pivotal in understanding how LLC taxes work is to find out whether LLC members pay self-employment tax. This is so important. Now, let me clarify things here. LLC members are not employees, so no contributions to the Social Security and Medicare systems are withheld from their paychecks. Rather, most LLC members are required to pay these taxes, and those are called self-employment taxes, when paid by a business owner directly to the IRS. So the current rule is that any owner who works in or helps manage the business must pay this tax on his or her distributive share, rightful share of profits. However, owners who are not active in the LLC, that is, those who have merely invested money but don't provide services or make management decisions for the LLC, they may be exempt from paying self-employment taxes on their share of profits. The regulations in this area are a bit complicated, so if you actively manage or work in your LLC, you can expect to pay self-employment tax on all LLC profits allocated to you. So if you have more questions about that, you can actually just drop us a comment, either privately via email, or you can drop a comment below this video. Okay, it's really important to understand that each member who is subject to the self-employment tax reports the amount due on Schedule SE, which must be submitted annually with his or her tax return. And LLC owners and sole proprietorships and partners, for that matter, pay twice as much self-employment tax as regular employees, because regular employees' contributions to the self-employment tax are matched by their employers. However, LLC members also get to deduct half of that total amount from their taxable amount, or their taxable income, that is, which saves a few tax dollars. Okay, so this is really important. So as of this year, the self-employment tax rate for business owners is 15.3%, which consists of the following. So you have a 12.4% for Social Security on earnings up to $147,000. You have a 2.9% for Medicare on all earnings, and an additional 0.9% Medicare tax rate for all income above $250,000 if you're married filing jointly, or $125,000 if you're married filing separately, or $200,000 all other taxpayers. Okay, and if you are interested in learning more about this issue, just want to go to the IRS website for annual net income threshold amounts. Let's have a quick convo about LLC tax deductions, because we spoke about paying taxes, but you have to talk about tax write-offs too, right? This is very important. So as you don't have to pay taxes, I've said this before, on most of the money that your business spends. right? Income taxes or self-employment taxes. You can deduct, in other words, write off your legitimate business expenses from your business income, which can greatly lower the profits you must report to the IRS, and you should do that. Okay, and the law allows it. So deductible expenses include startup costs, automobile and travel expenses, equipment costs, and advertising and promotion costs. Okay, so this is really what it is. Now, LLC owners may also be eligible for a new income tax deduction for pass-through entities established by the Tax Cuts and Jobs Act. So starting in 2018, the owner of a pass-through entity, including a single or multi-member LLC, can deduct for income tax purposes up to 20% of the net income from the entity. That's called QBI, okay? And so, for example, if net income from a single-member LLC business is $100,000, the owner may deduct up to 20 grand from his or her income taxes. However, if taxable income exceeds an annual threshold, the deduction is limited to 50% of the amount paid to employees of the entity, or 25% of employee payments plus 2.5% of the value of depreciable business property. This can be a little complicated, but hey, listen, if you are interested in digging a little further, please drop us a comment below or email us privately and we'll explain things to you, okay? So let's dig a little deeper here. So as a business, you are able to deduct certain expenses from your taxes. So the IRS says that a deductible business expense is both ordinary and necessary. In other words, your business can write off any expenses that help your business succeed. Okay, so you can have things like office supplies, rent, and general maintenance. General maintenance is very important, and you have licenses and permits, advertising, insurance, and what have you. So the thing here is that there is a large constellation of expenses depending on your specific LLC, on your industry. Okay, remember that expenses are only deductible if they are appropriate. Very important. So you might think a rooftop jacuzzi is important for maintaining your business, but the IRS probably will not agree with you unless you are a jacuzzi selling business. Let us talk about state taxes and LLCs. So do LLCs pay state taxes? Most states tax LLC profits the same way the IRS does. In other words, the LLC members pay taxes to the state on their personal returns, while the LLC itself does not pay a state tax. So a few states, however, do charge an LLC tax based on the amount of income the LLC makes, in addition to the income tax its owners pay. For example, California, as I said before, levies a tax on LLCs that make more than $250,000 per year. The tax ranges from about $900 to $11,000. Okay, and you also have annual fees in some states. So some states impose an annual LLC fee that is not income related. So this may be called a franchise tax, an annual registration fee, or a renewal fee. And in most states, the fee is about $100, but California, again, exacts a hefty $800 minimum franchise tax per year from LLCs. So note that this tax is waived for the LLC's first year for LLCs formed in 2021, 2022, or 2023. Okay, so it's very important to really understand the range of fees or taxes that you might have to pay at the state level if you are either a single member LLC or a multi-member LLC. So before forming an LLC, find out whether your state charges a separate LLC tax or fee. Okay, this is very important. So for more information, you want to check the website of your state's Secretary of State, Department of Corporations, or Department of Revenue or Tax. This is really important, so this can actually help you have a clear idea, because the last thing you want is to be surprised. You actually form your LLC and God forbid you are actually running a loss. So you are having, like, let's say, a series of loss year after year, but you have to pay LLC fees. Okay, this is kind of crazy, especially if you are in California and you are paying something like $900 or $1,000 every year, but you are having a loss at the business level. This can be problematic. So please do some digging, do some research before you form your LLC. And the cool thing is you can live, for instance, in California and open an LLC in Delaware, for instance. You don't have to open the LLC in the states where you live primarily. There are a lot of legal and regulatory I would say, acrobatics that you can do to open your LLC in a state that is friendlier, quote unquote, friendlier to LLCs. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another session of the Awesome Sweaty Kiwi Show. We are actually having a conversation today about how LLC taxes work for real, and we want to talk a little bit about LLC bookkeeping and accounting. And this is important because you want to keep, your books intact. You want to keep your books in compliance so that you can report proper taxes to the IRS come year end. Okay, it's also important to make sure your books are in order to protect your corporate veil. This is very important. So when we talk about corporate veil, this is actually what gives your LLC the foundation that it has in terms of protecting your private assets. Very important. So you want to separate your personal matters from your business expenses as much as possible. Okay. And how do you do that? Well, there are a lot of ways to do this. Okay. But you can do this. There are three primary ways, but again, there are a lot of ways depending on your industry, depending on the way your LLC is formed. But you can do those three things first. You open a separate business bank account. In other words, you are basically routing all the cash inflows and cash out. You are routing the cash inflows to that account, and you're doing all the cash outflows from that account. A separate business bank account. It could be a business bank account or a business checking account or a business savings account. Okay. You want to obtain a business credit card for work-related purchases. That way you can categorize all, you can actually segregate all your expenses that are related to work on a credit card that is distinct from your personal credit card. And the cool thing about that is that, and this is something that has nothing to do with taxes, but you can actually build business credit also, which is important if later on you want to get a business loan, you want to get a business financing and what have you. Okay. Trying to create a solid bookkeeping system. It's very important. So a high quality accounting program can help keep track of your expenses and make the process simple and relatively pain-free. You can also hire an accountant. Okay, so big decision time for you. Do you currently have a business bank account? Do you currently have a business credit card? And what accounting software do you use? Do you use a QuickBooks, Xero, Wave, Expensify? So try to have those. Those are really, really important. Let's talk about additional taxes that you might have to pay if you are an LLC, because we have spoken about federal and state, right? This is important, but federal income tax is not the only type of tax you'll have to pay as a business owner. Okay, and so let me give you a closer look here. You have self-employment tax. So self-employment tax, as mentioned earlier, is a combination of the employee and employer's contribution for Social Security and Medicare. So when you file taxes as a standard single member LLC, your entire business profits are subject to self-employment taxes, currently 15.3% between Social Security and Medicare. So when you opt for S-Corp taxation, you only pay self-employment taxes on your paychecks. Additional income, known as distributions, is only subject to your regular income tax rate. Okay, so this benefit becomes worthwhile around 40 grand to 80 grand in annual business income due to the savings on self-employment taxes. Okay, so with this business structure and filing method, owners who earn six figures or more are likely to find thousands of dollars in yearly savings. Okay, so when you opt for S-Corp taxation, you have to think about payroll taxes. So if you take the S-Corp path, you will need to pay yourself using a payroll system that helps calculate your payroll taxes. As a business owner, your payroll taxes are part of the self-employment tax that we explained earlier. Okay, so standard payroll tax rates are 6.2% for Social Security and 1.45% for Medicare taxes. So the employer matches these amounts. Very important. So when you work for someone else, they cover the employer's portion. When you are self-employed, you have to pay the employer portion yourself. You also have to think about sales taxes because depending on the nature of your business, you may be required to collect sales taxes. So sales taxes are local or state taxes not paid to the Internal Revenue Service, okay, but paid to the state tax authorities. You also have to think about state taxes, okay? I spoke about that before. Your state income tax is very important. So the requirements here vary by location. So we don't have room to cover everything here. If your state taxes your business income, you'll want to check with your state tax website or a trusted tax expert to ensure you are handling things correctly. Okay, and so for instance, taxpayers in Alaska, Florida, Nevada, New Hampshire, South Dakota, Tennessee, Texas, Washington State, and Wyoming have no state income tax, making state taxes easier and cheaper than the rest of the U.S. You also have to think about other taxes. So this may not be an all-encompassing list. Okay, depending on where you live, you and your business could be subject to franchise tax, use tax, and more. So let's just wrap it up here. So when we talk about LLC taxes, how they work, what they are, it's important to understand a few things. So let's talk about LLC federal income taxes. So regardless of which tax designation you elect for your LLC, you still have to file with the IRS. All owners who have to fill out Form 1040. This is your individual income tax return and its appropriate schedules. So you have Schedule C. So this is actually income specifically for your business. You have Schedule SE, the form for filing and paying your self-employment taxes. And you have Schedule E, the form for reporting any income from rental properties and other investments. Multi-members LLC and special entities will need to file more than that. So partnerships, in addition to Form 1040, must also file the following. You have Form 1065, so this is the form used to report your business's gains and losses. You have Schedule K1, the form for reporting your share of the profits as an individual owner. Okay, so this is really important, and so it's really important to always have a clear idea of the constellation of taxes you have to pay. So because LLCs are typically pass-through entities, they do not have to pay separate state taxes. That is, the individual members pay state taxes, not the LLC itself. And here are some of the common forms of state tax. You have franchise tax. So some states require this tax, which is based on how much an LLC earns per year. You have sales and use tax. If you sell physical products, consumers pay this tax to you, and you pay this tax to your respective state or local governments. You have gross receipts tax. While similar to a sales tax, a gross receipt tax is just paid by the seller instead of the buyer. Okay. You have a withholding tax. So this is income that is withheld from employee paychecks and paid directly to the government. And you have unemployment insurance tax. This is a UI is used for unemployment benefits. So tax rates are set by state law. So this is really important to have a clear idea of the constellation of taxes that your LLC has to think about. Now let me say this: if you don't understand a lot of the stuff I've just talked about, it just means you want to outsource the tax thing, the tax filing, to an accountant. You can hire a CPA or an enrolled agent. Okay, so this trusted expert will help you actually file your taxes with no problem. Thank you so much for your attention to this conversation. I was talking to you about how LLC taxes really work. So I gave you an overview. I talked to you about income, how income is taxed from an LLC perspective. Do LLC members pay self-employment tax? We spoke about LLC tax deductions. We spoke about whether or not LLCs paid state taxes. We spoke about bookkeeping and accounting in the context of an LLC. We spoke about additional taxes, and I wrapped it up for you very nicely. Thank you so much for your attention. I really appreciate it. God bless you. I will see you next time. But until then, remember, stay marvelous.